The program is about an hour.
Hi and welcome. I'm Nomi Prinz. I'm here today with Jake Halpern, the author of the fascinating and horrifying new book, Bad Paper, Chasing Debt from Wall Street to the Underworld. Jake, welcome.
Thanks for having me.
Thank you. This book is incredible. And so is your story. And I think the two really mirror each other. This takes place in Buffalo, New York, a lot of it. And you're from there, aren't you?
Yeah, that's right. I grew up there. My dad and his wife still live there. I go back there fairly often, and it's kind of how I find my way into this world.
You talk about a particular and many unsavory characters that are scrabbling to make their own piece of the world and often have prison records and have been drug dealers and so forth. There's a fellow named Jimmy that comes out here that seems to be one of the main characters of this nonfiction story.
Right.
Can you talk to me a little bit about how you connected with him?
Yeah, so the way this got started was I was talking to my mom a few years back, and she told me she was being hounded by a debt collector. And she said, I don't owe the money that he's saying I owe, but I think I'm going to pay him just so he'll stop harassing me, which my mom is like no lilting Willie. So I thought, this is kind of bizarre, and I started Googling it and saw that there was a lot of this kind of going on, and that actually the epicenter of debt collections in general in the United States was Buffalo, or was one of the big hubs. So I had in my head that I was going to do a story actually from the collector's perspective, and what's it like to collect debt, what are the challenges you face, what's your life like. So I pitched the story to the New Yorker, just kind of bare bones, saying like, what do you think about this? I'm from Buffalo, I could probably get someone to talk to me. And my editor said, great, 5,000 words, when can you get me a copy? So I kind of panicked because I had nothing. So I went to Buffalo once and no one would talk to me basically. And I went a second time and I still had nothing. And so I started to panic because I was on the hook for this story. So I went on Facebook and I just sent messages to everyone I went to high school with, and then everyone my brother went to high school with. And I get one message back from this guy who was actually Jimmy's brother, and I got Jimmy on the phone, and Jimmy said to me basically, you better get down here quick if you want to talk to me, because my business is struggling. I don't know how much longer I'll be open, but if you can like show folks how hard my day-to-day life is, I will be satisfied. So I popped down to Buffalo, showed up, and Jimmy just was immediately one of these amazing characters. It was just eloquent and emotive, and I'm driving around in this car with him, going to church with him, and meeting his family, and that becomes kind of my entry point into this world.
And he had a struggle. You knew him growing up as well. You got to him through a set of correspondences through Facebook and so forth. Tell me a little about your history in Buffalo and just the atmosphere in Buffalo, how it's changed from what you knew growing up and in your childhood to the kind of place that it's one of the capitals, right, of debt collection in the United States. How did that?
Yeah, so I mean, Buffalo was once this big industrial powerhouse. It had all these steel mills and all this industry, and starting in the late 70s and early 80s, basically when I was a kid, that all starts to fall apart, and unemployment goes through the roof, and in place of a lot of these old industrial jobs, collections kind of fills that void. Someone told me that Buffalo is so good at collections because even though the country has been in a great recession since 2008, Buffalo's been in it since 1979, and people there, you know, can connect with people who are having hard times. So when I was kind of a teenager even, this was starting to kind of take form. But I don't think I really knew about it. And even though I went to high school with Jimmy, we went to the same high school, and it was supposed to be an integrated high school, we came from opposite sides of Main Street, and Buffalo is a fairly segregated city. And I didn't have any sense of what life on the east side of Buffalo was like, or what Jimmy was going through. And even though we could talk about having the same English teacher, it was like we were from totally different worlds. And it wasn't until I started reporting this story that all of a sudden I learned that when he was in high school, his father was a heroin addict, that after getting out of high school, he had become a cocaine dealer, had gone to jail on a gun possession, and our lives couldn't have kind of been more divergent.
So he, you said, is the entry point into the rest of the story, and he, of course, has a very interesting component of this story through something that you call the package,
right?
Which seems to be the crux of what you're chasing, and what the debt collectors are effectively chasing and involved in the book. Can you kind of talk about his relationship, what the package is,
right,
and how that opened up the rest of this amazing story to you?
So yeah, so the package is this one piece of debt that I follow through the book, and it's I think helpful to understand that when I talk about debt that's being bought and sold here, we're really just talking about an Excel spreadsheet. So you have the big banks or creditors, and they try for, say, 6 months to collect on a debt that's not been paid. And when they can't, they'll typically sell it off for pennies on a dollar to debt buyers. And those debt buyers will collect whatever they can and then sell to the next and the next and the next. And what they're selling is just, as I said, a spreadsheet with the bare bones information.
Just information on customers, on their balances, on their where they live, what kind of information?
So like you look at the spreadsheet, it will have debtor's name, social security number, address, balance, date that the account was opened, maybe one or two other fields, but that's basically about it. And they're just being bought and sold and emailed or sent by thumb drives, and that is the paper. They call it paper, but that's really all that it is. And as you can imagine, it doesn't take much for something to go wrong, for some of the fields to get mixed up, the amounts, the debtors' names to get confused, or for someone to sell the same Excel spreadsheet to multiple unsuspecting buyers who are all collecting on it at once. So in my book, I follow the package, and what I call the package, this one piece of debt that's about $48 million in its face value, but which is bought for pennies on the dollar by this debt buyer in Buffalo. His name is Aaron Siegel. And what happens is this piece of debt gets stolen. Somehow, Aaron finds out from his collectors. They start calling him and saying, Aaron, something weird is going on with these accounts. It appears that somebody else has access to this information and is collecting the money from the debtors on this package before we get to them. So at that point, he calls his fixer, who's a guy named Brandon Wilson, who's a kind of his unofficial partner, who's a former bank robber, who's kind of gotten into this business, helps him buy and sell debt, but also helps him solve these sorts of problems. And it's Brandon who then goes and tracks down the thieves that have gotten a hold of this debt and retrieves it. And we can talk about, it's a crazy showdown with guns and they get it back. But the world in which he must go to retrieve that debt, that's the world that Jimmy inhabits, which is this kind of gray area of legality, kind of underworld of buying and selling debts in kind of sketchy manner that exists in Buffalo and in other places.
Right. And this underworld has that hierarchy you mentioned. And there you have sort of former thugs, to a large extent, at the bottom level, getting some of this paper that is perhaps been sold and resold. And you also talk about how paper's been stolen as well. And then you have sort of the level up through Aaron Siegel. And he seemed really an interesting character to me. I'd like you to kind of talk about how you got to him through Jimmy, and also through the package. And also, he wasn't a thug. He grew up on the good side of Buffalo, right? He had a wealthy family upbringing, lived in a mansion.
Right.
So how did he come into the same business?
Right. So the story really the way that I tell the story in the book, it starts with this guy, Aaron Siegel. And Aaron grew up in a wealthy and very well-known and well-respected family in Buffalo. He goes to Wall Street for a while as a banker. He even does some time in London and decides he wants to come home and be closer to his family. And he ends up working at an office of Bank of America in Buffalo. But around the time that he comes back, what's happening is that throughout Buffalo, entrepreneurs are buying some debt, or they're buying this paper, these spreadsheets, and then opening up a shop where they hire a bunch of collectors to collect on it. And the profit margins, this this is right before the kind of Great Recession happens. His profit margins initially, when he gets into this business, are through the roof. He's like buying a portfolio of debt for 30 grand and in 3 months making 90 grand. So he realizes that he's kind of found this amazing little niche of the finance world. And his supply, the key to much of his success is he's got this supplier who's supplying him with this paper at a really great price, and it's really lucrative. The weird thing about the supplier is he's this fellow, Brandon Wilson, who's this former armed robber who's done 10 years in prison, but has reinvented himself as a debt broker who's got this kind of genius for finding paper that pays, that is very collectible and isn't that expensive to buy. And so even though Aaron kind of comes from this very kind of more rarefied world and has got this kind of banking past, he understands that in this sector of the economy, it's not unusual to have some kind of shadier connections or some guys that are rough around the edges. And so he and Brandon form this kind of unlikely friendship and partnership. And that's really the starting point for the book and for the story.
And you talk about how when they're looking for this paper, Aaron's looking for paper, looking through it through Brendan, he actually also buys a portfolio from his old firm, from Bank of America, that you talk about as being not so great a portfolio, but for reasons other than the fact that it's been stolen and moved around the block many times.
Right. So the irony is so Aaron is always, the key to making a profit margin in this world is getting good paper. Everyone's hunting for good paper. And when he buys from his former employer, Bank of America, you would think that this would be as kind of respectable and as dependable as it could be. He feels that the Bank of America really pulls a fast one on him because he spends all this money, millions of dollars, buying this piece of debt from Bank of America, and it turns out they're almost all senior citizens, which have the smallest amount of disposable income. And he feels that the Bank of America failed him, but the former armed robber, Brandon, that he does business with, kind of comes through for him in a way that his former employer doesn't.
What does he do?
So he's really behind the 8 ball when he buys this Bank of America paper and it's all these senior citizens. He feels that he's not going to be able to turn a profit because he's invested all this money in them. So he goes back to Brandon, and Brandon's specialty is finding what he calls crap. And crap, in Brandon's definition of it, is old debt that everyone thinks is worthless because it's been around the block a few times, it's been bought and sold a bunch, it's 10 to 15 years old, but it still pays because maybe it was sitting in a call center in Brazil for 5 years and no one was working it, or maybe it comes from a debt buyer that is about to go under and needs to sell it off cheaply. So Brandon would find these little deals on this paper, and so after Aaron buys this stuff from Bank of America that really puts him behind the 8 ball, he turns to Brandon and says, Brandon, you got to come through for me and really help me find these deals on this crap and this other stuff that you find. And then the package, which we talked about before, which is this piece of debt that gets stolen, the package is actually fantastic paper for Aaron. It's really good. He doesn't pay a lot for it. It's paying off for him. And then, of course, it gets stolen. And, he's like, all right, Brandon, go fix this.
Right. And how did Aaron even come up with the money to buy the package? I mean, he did okay. He had a banking job. He went back to Buffalo. Who's behind sort of funding the initial purchases of some of these packages at the Aaron level? Right.
So Aaron's story is, he's a banker. He's in New York, comes back to Buffalo, sets up his own small collection agency, and with Brandon's help, he's getting this paper that's really paying huge dividends. So he, like any good financier, starts thinking, wow, what if I did this on a much larger scale? So he makes a few phone calls and finds 8 investors who give him $14 million to do a trial run. The thinking is, if he can do with this $14 million what he's done with his own money, these 300% returns and whatnot, then he'll do it even bigger for this $14 million, and the $14 million he'll do it a second round with $40 million and bigger and bigger. The problem is that that there's several problems, one of which the Great Recession occurs and people don't have as much money, and then he encounters many problems along the way, including the theft of some of this paper, which I chronicle in the book.
And so basically before that, or while that's happening, he's in a hole. He's out some amount. That's a proportion of $14 million. He's got investors on the other side squeezing him for, they want their money back. You visited a couple of these investors, right? How were they feeling about it? What was their stake in this, and how much were they pressuring him, and how much was it a portion of their own money? How much did they even care about what happened really?
I think that
what they gave Aaron.
It's funny because I did want to meet some of Aaron's investors and kind of get a sense for what their take on this was. And I went out to dinner one night with one of them. And so first thing you have to understand is there's this strange sequence of events. The debtors are owing Brandon, who's collecting on it. Brandon's getting the money. He owes Aaron, who's organizing the fund. Aaron then owes the investors who gave him the money. So there's this, everyone is beholden to one another. Everyone is connected by this thing of debt. So when Aaron goes to meet one of these investors, this fellow named Joseph, he's totally anxious because he feels that he's going to fail this guy and owe him money. And it turns out Joseph just sees this almost as he's just popped him $1 million to see. He's also put money into tanning salons and bars. And for him, Aaron said he was hoping it would pay off, but it's almost like an amusement. And when we're having dinner with Joseph, I say, do you ever think about basically the people whose debts you're buying? And he says, no, why should I? They've made bad financial choices. Is it my fault for wanting to profit on it? And he makes the analogy to a baseball game. He says if a pitcher pitches a bad pitch and the batter knocks a triple, is the batter somehow wrong for taking advantage of the bad pitch? And that was Joseph's feeling about the whole situation. But it was kind of crazy to think that I met some of the debtors, and they're a poor single woman living in St. Louis is connected to this former armed robber from Boston who's connected to this Buffalo scion Aaron, who's connected to this wealthy investor, and all of their lives are connected by this chain of debt, but none of them really know one another. That whole aspect fascinated me.
Yeah, and the way you write about it is so clear. It's like we're there, in your writing. You're an excellent writer, and you really are an on-the-ground journalist as well, and that really helps to bring alive these characters and also the locations in which you're meeting some of these people. And you have gone around to meet from that top of the chain, the Josephs, down to the bottom of the chain, the individuals that get really hurt and mauled over in this process. And you actually talk about some specific individuals that are just numbers in this package. They're just represented as numbers, but they have real lives. And you went and investigated and spoke with some of them. You mentioned a woman named Teresa, a woman named Joanna, who were at one point taking out credit and paying it, and then things happened and they got involved in this whole vortex. What was that?
I mean, you're absolutely right. What's being bought and sold here, it's easy to think of it almost as some sort of commodity like coffee shares or something, because you're just looking at these string of numbers on these sheets and there's thousands of them, and this one paid and this one didn't pay. But you pause for a second, you think that this package of several thousand lines on this Excel spreadsheet are basically several thousand stories of people whose lives, for one reason or another, have fallen into financial ruin. So I managed to get a hold of this spreadsheet for the package that got stolen. And I was looking at it, and I was thinking to myself, these are stories here. These names and these numbers represent something that's happened. So I started kind of reaching out to some of these people and explaining, I'm the journalist, I'm looking into this particular piece of debt that I believe was stolen, and I want to hear your stories. And most people just hung up on me. But a few who I profile in the book talked. And what they said, Teresa, the woman that you mentioned, she was a former Marine. She had, she defies whatever stereotypes we have of a debtor. She had worked right through high school, helping her parents pay off their mortgage, and her life comes apart after she gets out of the Marine Corps. She finds out that her husband is cheating on her. She kicks him out of the house. All of a sudden, she goes from being one income to two income, but she's still on the hook for the vehicle payments and the mortgage, and she falls behind in her bills. And at that point, she stops, the fees start kicking in on this Washington Mutual card, which is the card that was connected to the package. Late fees and over the limit fees, and eventually she just can't pay anymore. So unbeknownst to her, Washington Mutual sells off this debt to a debt buyer, and it ends up in Aaron Siegel's hands in Buffalo. And then it ends up being stolen and in the hands of these guys that don't actually own it. So one day, Teresa, of course, doesn't know about this. So one day she gets a call and says, ma'am, you owe this money, and you need to pay this right now, or there's going to be legal repercussions, and this is your chance to do it. And the calls get increasingly threatening. Meanwhile, Teresa has got a job working at Border Patrol in the Southwest, and if she doesn't have her credit in order, it's hard to have a job like that because you could be, blackmailed, or it's a liability, right? So Teresa's thinking, oh my God, I'm going to lose this job. What am I going to do? I'm just going to pay these guys off. So she agrees to pay $2,700 off in several installments. She feels good about it, that she's getting on top of it. But when she makes the last payment and she's expecting to get some sort of receipt for what she paid, there's nothing. And when she checks with the credit reporting agencies, there's no record of her paying. She has no idea. She assumed that she was paying people. Why would you assume otherwise? They had all of her information, but she's paid people who stole her debt. And these are some of the people that Aaron and Brandon realize are paying the wrong guy. So you're absolutely right. Each one of these names on this package of debt that gets stolen are real people, and the stakes couldn't be much higher for what this means for their lives.
And it seems like there are so few rules or abilities from regulators to really cover all of these different points that you talk about, these individuals, debt moving back and forth when it does.
Yeah.
And people like Teresa don't know what's going on. They're just afraid. They're just paying because of the phone call. What kind of tactics are coming from that other side of the phone call? Because almost a third of Americans who have debt right now, are in collection.
That's right.
So they may be getting these phone calls from some of these people that you talk about in your book. What is that like? What's their...
Right. So you're right. Absolutely right. About a third of Americans have a debt in collections, and when you're getting called by a debt collector, basically what you get is the talk off, and the talk off is the collector on one end trying to persuade you to open your wallet and pay your bill. So there's legal talk offs, there's illegal talk offs, and there's kind of a gray area. So the legal talk off would be, just talking through, this is the information, you owe this amount, this is your Social Security number, you need to pay this, how can we arrange this, you have to do this. The illegal tactics are when you're basically threatening and lying to consumers, saying, we're going to take legal action when that is not true, we're going to arrest you, we're going to seize your property. Lies and kind of coercion and threats like that are not legal, and that happens a fair amount. And if you think about it, it happens towards the bottom of the debt food chain. So if you have this piece of debt that the banks sell off to a fairly reputable debt buyer, they don't need to do that to get their money out of it fairly quickly. But when that debt has been bought and sold 6 and 7 times, what you're left, what it's whittled down to, are the folks that haven't paid any of the previous 6 owners. And the people that get that debt are usually the people at the very bottom of the food chain. And that's where they almost feel that they have to make these very threatening calls and these illegal tactics in order to kind of squeeze the money out of folks. And there's often these small agencies that open up, they do it, and then they close back down and then open up somewhere else before they can be caught by the authorities. And I just want to make one other point, which is that there's not a lot of regulation and law enforcement that exists. It's changing. It is the Consumer Financial Protection Bureau and the state attorney generals are starting to get more into this space, but within the last bunch of years, there hasn't been much regulation. And that helps explain why a banker like Aaron would team up with a former armed robber like Brandon, because not only is Brandon getting good paper, Brandon's basically offering him a service that regulators and law enforcement can't, which is when something goes wrong, I will solve this problem for you. Because calling the police and calling the state attorney general and calling the CFPB is not going to get it done. You need me, Brandon Wilson, to straighten it out. And I think that Aaron saw the truth in that.
And you make the comparison just in that. You've got desperate people on one side who are trying at the bottom of their food chain to collect debts. And you have desperate individuals who are getting these phone calls and are paying because it sounds scary.
Yeah.
And you have very little regulation, particularly at the bottom
Yes.
part of this chain. So what recourse do some of these individuals have, or what can they do besides, where do they complain? What can they do if they've paid on a debt,
Yeah.
but it's gone to no one? I mean, it's gone to basically some of these people.
Right. I mean, I was sitting in a shop. I was sitting in Jimmy's shop one day in Buffalo. This is a few years ago, and I was listening to the calls between the collectors and the debtors. And the guy gets on the phone, and Jimmy's trying to collect from him and says, "Hey, you owe money on this payday loan." And the guy said, "I just paid this payday loan off 3 months ago. I paid $900. By the way, that was probably a $300 loan. I just paid it off." And Jimmy said, "Well, can you send me written proof with a receipt from that agency showing that you proof?" And the guy said, "I never got that." And then Jimmy said to him matter-of-factly, "Well then, sir, I'm afraid you still owe the money." And he turned to me and said, this is the only way that I know that guy is telling the truth. Like, if I just forgave every debtor that said they had paid, I wouldn't be in business. But you got a sense of the franticness of the guy on the other line who sounded fairly earnest that he had paid this off. And he didn't sound like he had much recourse. I think the calls will continue until you pay, kind of thing. Now, there are one or two things that are helpful for consumers to know. One is know what the statute of limitations in your state is for when a debt is no longer legally enforceable. And it varies from, say, like 3 to 6 years. But if you're getting a call on a debt that's 4 years old and the statute of limitations in your state is 3 years old, then you have no legal obligation to repay that debt. And the other thing is, after 7 years, most negative reporting falls off your credit report, the credit reporting agencies.
So is it safe to say that that's very interesting, I think, information for anyone out there who's getting these calls? Is it safe to say that if you do get a call on any level of threatening after 5 or 6 years about a debt back then, is it safe to say you should, ignore that call?
Yeah, you may feel that you have a moral obligation to repay it, but yeah, I would be if it were me, I would probably think twice about repaying it if I know in a year it's going to go off my credit report rating because it's been 7 years, or if there's no legal recourse because it's an out of stat or beyond the statute of limitations. And the other thing I would just say is, I would want to make sure the person on the other end of the phone actually owns the debt. I would want to, and the problem is there's not an easy way to figure that out, but you could get the name of the company, check them out on the Better Business Bureau website, and get a sense for whether this seems like a reputable company or not.
Right. You actually were on a call as part of your research for this book. You were actually in one of these collection centers, and you got on the phone to sort of feel like what it was to be a debt collector and have that conversation with the person at the other end of the phone. What was that like?
Yeah, so I was at Brandon Wilson's collection agency, and we were up in Bangor, Maine, and I was just observing, and he said to me, "Look, you got to get on the phones. You can observe all you want, but you're not going to actually understand what this job's like unless you collect." And I was kind of reluctant for a few reasons, one of which is I just didn't want to hound people. But the other collectors who worked for him started kind of haranguing me and saying, "You've got to try this." And I said, all right. So I got on, they gave me a headset. I sat in front of one of these terminals, and they had it on auto dialer so that debtors whose contact information had been verified would just route to me. And so the first call came to me, and it was a woman who owed, I think, like $450 on her cell phone bill. And I said something like, "Ma'am, I see you owe this $900 now with interest, but we can give you a reduced rate. Would you consider paying this?" And I heard myself saying it, and I thought, I wouldn't pay me. That's such a weak opening gambit. And eventually we're talking, and I'm trying to, Brandon's whole thing's got to marry the debtor, which is that I have to have such empathy that, you know, like, what's going on with you in your life, you're working, and that we'll have some sort of connection that she'll feel like she can, you know, open up and trust me. And I'm trying to do this, and at one point she says, well, maybe I could write you a check, but I don't like seize on that right away because I'm trying to marry her. And then she hangs up. And Brandon is right behind me, kind of playing, you know, coach. And he's like, look, you failed at this not because you didn't collect. You failed on her because at the moment she offered to make that check, you should have said, okay, so you're going to send me that check? Yes. And you're going to send it at the middle of the month? Yes. Because in Brandon's psychology, the minute that she promised to make that payment, we had kind of gotten her because she'd committed to this, and now we could use that the next time we called her. Anyway, so there's a few calls like that. I was a very, very bad collector, but what I realized at the end was I could afford to be a bad collector. Like I'm married to a doctor. I make a decent living as a writer. But if I were desperate like some of these collectors, I would have gotten wise quick to what I had to say and do to make folks pay.
Because they are desperate. They are like sharks. I mean, that's basically what you've depicted here in a very clear manner.
Yeah, I mean, there's some collectors that do well for themselves and work at more of these kind of white glove customer service type places, but a lot of collectors are pretty desperate. I mean, I was at one agency where in payday at the end of the week, one guy made $115 and another guy made $85. And that's poor. Yeah.
On the Go, Afterwards is available via podcast through iTunes and XML. Visit booktv.org and click podcast on the upper left side of the page. Select which podcast you'd like to download and listen to Afterwards while you travel.
So, Dick, you talk about this underworld in Buffalo and going up to Bangor, Maine and getting on the phones and dealing with that sort of set of characters. Then you also talk about another pillar of this debt collection world, which is Las Vegas. And you went there to do investigation there and to deal with some of these individuals and discover new things there. What was that like?
Right, so I wanted to see how Brandon Wilson was buying this debt. And if you remember, Brandon is the former armed robber who works for Aaron and is finding these deals on paper, and those deals are key to making the profit margin. So in the course of talking to Brandon about where he, you know, hunted or searched for paper, he said, Las Vegas, every February there's a big debt buyers convention and I go out there and I hunt for deals. So I asked him, can I tag along? And he said, sure. So in February 2013, I flew out to Vegas and spent several days with Brandon as he was on the prowl for these deals. He wanted to get a few, what he called these buckets of debt, that he could then bring home with him either to work at his own collection agency or that he could then flip and sell to other folks. And well, it was interesting because when we arrived there that year, the market for debt was changing for two reasons. One was the regulators were finally starting to crack down a little bit, and that was making some of the banks nervous about who was getting a hold of their debt. The other thing is that during the credit boom of the 2000s, credit was just everyone was getting a loan. And now all of a sudden, after the recession, creditors are becoming more careful about who they issue credit to, which means that the cost of buying these bad accounts that no one collect on goes up. So all this meant that Brandon had to work that much harder to find these deals. And when he was there, he was hunting for this paper that he called the Rincon paper. Do you want me to tell you a little bit about that?
Yeah, that's a really interesting story.
Okay, so when he gets there, the word kind of on the street or in the hotel lobby is that there's a parcel of debt that everyone is calling the Rincon paper. And it's It's debt that belonged to an agency out in California known as Rincon that the Federal Trade Commission actually shut down because they were doing all kinds of illegal stuff in terms of collecting and threatening and abusing debtors. And after they shut down this agency, its assets went into a court-appointed receiver. The court kind of, the same way that you would seize like a drug dealer's car and auction it off to raise revenue, the same thing happened. But the assets that this Rincon company had were largely their paper, the debt that they were collecting on. So now, basically, this court-appointed receiver was auctioning off this paper. And everyone was trying to figure out, how much is this worth? It's a big piece of debt. So I'm going around with Brandon, and he's kind of just doing his intelligence, talking to folks. What do you know? What's the word on this Rincon paper? Is it any good? How much would you pay for it? Would you pay 1 penny on the dollar? Would you pay 1/10 of a penny on the dollar? That kind of thing. And I'm with him one day when he meets this woman who is another debt broker. And Brandon wants to talk to her because she used to sell debt to Rincon, and she was intimately familiar with the workings of the company, and she said, don't buy it. And Brandon says, I kind of wasn't going to, I had a bad feeling about it, but why are you saying I shouldn't buy it? And she said, well, I have reliable information from the people at Rincon that some of that debt was stolen after the offices were shut down. And what's more, that some of the chains of title proving kind of legitimate ownership of this debt is not there. And I have this information, she claimed, directly from people inside Rincon. And if you buy that debt, you're going to be in a world of trouble, because particularly if it was stolen, that means someone else could be working the same paper that you own. So I eventually called up someone at the Federal Trade Commission. I said, is it possible that some of this paper was stolen after the offices were shut down? And they basically said to me, I can't tell you for 100% certainty that some employee didn't walk out the door with some of that paper before we shut that down. So then I went and I did a little more digging, and I looked at the terms of sale that the court was saying. If you want to buy this paper, this is the agreement you have to, the contract you have to agree to. And the contract said in pretty clear language, we are making no warranties or guarantees about the accuracy or the validity of this paper that's being sold. So basically, to sum this whole thing up, you have a federal regulatory agency shutting down a bad actor in the business, handing over its assets, its paper, to a court-appointed receiver, and then there's an auction, and they're selling off that paper. And there's reason to believe that, at least possibly, they're selling paper that's been stolen. And it was kind of mind-boggling. These are people that are meant to be cracking down and solving problems, might inadvertently be kind of creating problems. And in the end, Brandon decides that he just doesn't want to make a bid on this Rincon paper that's owned by that's being controlled by this court-appointed receiver.
Yeah, I find that, again, horrifying that the FTC is closing down a shop, taking that paper, not doing anything with respect to, I imagine, the debtors that are involved on the other side of that paper, because they don't know what's going on with their debt. They don't know what's been shut and moved to going to somewhere else. And they could conceivably, whether it's for that paper or other paper, be getting calls from collection agencies that bought it, stole it, whatever, that they've never heard of, that they never had a transaction with. You mentioned, for example, Chase and Washington Mutual as two banks that at the top of a food chain, sort of, had papers. It's different from the Rincon example. But at some point, Chase stops selling its debt on because of regulations that have come into effect after the financial crisis and with the Dodd-Frank Act. How did that impact? First of all, why did they do it? Was there other motives? Were there lawsuits that they could have been dealing with they didn't want to deal with? And also, how did that impact this whole chain of other characters that were involved in debt collection?
Right. So the title of the book is Bad Paper, and bad paper is just paper that there's problems with, and that therefore it makes it hard to collect. And there's a lot of bad paper out there, because basically what these big creditors like, Washington Mutual's now, but now Chase or Bank of America, whatever, for years have just sold these spreadsheets out in a not a particularly careful or organized way to debt buyers. And the contracts that these banks create when they sell it to the debt buyers clearly have these crazy warranties in them that say we're making no guarantee about the accuracy of this information. And there's problems with it. There's all kinds of problems with it. And I saw that firsthand with some of the people that were connected to the package that I looked at in the book. Just to give you one quick example, there was a woman who's connected to this package whose debt, after going through the whole circus of what happened in Buffalo, ends up in the courts down in Georgia. And she's getting, it appears on her credit report, and she's in danger of being sued over it. And I meet with this woman and I say, okay, what's the story with this debt? And she says, I was hoping you could tell me. I don't recognize this Washington Mutual debt that I supposedly owe. So I said, okay, there's got to be an easy solution here. Let's call Chase Bank, which now bought Washington Mutual, and we'll just ask them directly what's going on with this amount and with this debt that you don't recognize. So I call up a spokesman for Chase. And I say, I have this woman right here. Her name is Julie. She has this on her credit report, but she doesn't recognize the debt, the amount, anything like that. Can you help us clarify? Because when this was sold off, it appears maybe it was done in a kind of, there were mistakes or what. The guy from Chase calls me back and says, Jake, we've decided we're just going to write off Julie's debt as fraud. And I said, well, why? And he said, well, we don't have any of the underlying documentation that would give us confidence that this is in fact a valid and accurate debt. They had some statements, but they didn't have the original signed contract or proof of who was paying the debt. I said, what do you mean you don't have it? Like, you're the bank, shouldn't you have it? And he said, well, when Chase acquired Washington Mutual, it was a very rapid process and information was lost. Now, when Chase acquired Washington Mutual, that is one of the largest financial acquisitions in recent history, and you're talking about a pillar of the financial world, and they're basically saying, you know what, we don't have this paperwork. So the mistakes that are being made that makes this paper bad aren't just happening at the very bottom of the food chain, the debt food chain, where you have street hustlers in Buffalo. There's every reason to believe it's happening at the very highest levels of finance, and our assumption, or my assumption going into this, that, oh, banks are not going to be making mistakes like this, is not necessarily a safe assumption to make.
I mean, you were actually coming at this entire story, which is one of the reasons I think it's the writing is just so clear. You're coming at it not from a sort of financial component, but really from the ground up, from this underworld you talk about, and from the individual's role in all of this and how people are impacted. The stories that surrounded the Washington Mutual Chase merger and everything that was happening during the financial crisis of 2008 have come into focus as being about this sort of thing happening mostly with mortgages.
That's right.
With attachments to mortgage loans being lost, with robo-signing and all sorts of those kinds of things. You actually bring up that this is going on and had been going on and has been going on not just in mortgages but throughout this entire credit spectrum with credit cards and other types of debt as well.
That's right. I mean, I think at this point people know that there is a lot of funny business going on with the way that mortgages were issued, the way they were bought and sold, the way the houses were foreclosed upon. It's been in the press. I think there's been a lot less attention given to this idea of consumer debt, whether it's credit card debt or payday loans, but they're the same sorts of problems. And in the way where that you see this in some ways the most strikingly is when we get to the courts, which is where we get towards the end of the book. So basically all those folks that are calling, the debt collectors that are calling saying you got to pay this, they're basically relying on the talk off to convince you to pay. But if they can't do that, then often it ends up in the hands of lawyers who then sue on that debt. And this is where it goes to the court, and many of the same issues that they've had with robo-signing with the mortgages, they're having similar issues in court with credit cards. Because basically, the lawyers that are suing on this debt, the evidence they have is fairly thin. It's these Excel spreadsheets, and there's problems with the Excel spreadsheets. But what's happens is that there's a 90% no-show rate with consumers in court. So if you think about it here, it's just to make it simple. I'm a guy, Jake, I can't pay my credit card. A whole bunch of debt collectors call me up. They bought and sold my debt for pennies and cheaper on the dollar. I still can't pay it. Well, eventually, they bring in the lawyers. And the lawyers sue me for this amount. And now, most likely, what they're saying I owe is much higher than the original principal balance. It might be 3 times higher because of the high interest rates. So if I go to court, I can challenge that and say, where did you get this number? Do you have proof that this is really my debt? Or what's the breakdown of interest and principal? But 90% of Americans don't show up in court. They either don't understand what it means not to show up there, or they feel there's no point. And what happens is that these numbers on the Excel spreadsheet that are highly suspect to begin with then get stamped by the court, and it becomes a judgment against you. And then your creditor can now garnish your wages. They don't have to call you up and beg you to pay. They can go right at your bank account and clean it out. They can get your monthly work check. And this is happening. There's a new study that's out by NPR and ProPublica that shows that 10% of Americans between 35 and 45 are having their wages garnished every week. So that's what's happening. Yeah.
That's astonishing. So you've basically given, in this book, in this interview, in Bad Paper, two very important pieces of advice for consumers out there who are involved in this debt collection process. One, if someone calls about a debt that's over a certain period of time, you should be very suspect about that call and likely ignore it. And also, as you're mentioning now, you should show up in court if you get summoned to court, because you have a much better chance of righting whatever wrong you've been involved in than if you simply don't show up and it goes against you.
That's totally true.
And that in itself is a justice you have provided through Bad Paper to, I think, the entire American public. So thank you for that. On behalf of the American public.
Yeah.
So you were in court. You mentioned Savannah, Georgia, and the kind of history that Georgia has in the debtor's prison, in the debtor's idea of reinstitution and all sorts of things. And you actually stood by some of these people.
Yeah, it's interesting. So the history was that, originally Georgia was conceived as a kind of utopia that would rehabilitate debtors. They would come from the debtors' prisons in England and come to the New World and get a fresh start and kind of get out of the chains of debt and rebuild their lives. It was this kind of very upbeat, optimistic view of reinvention, kind of getting... But the irony is that that's really not the case in America these days. I mean, we hear a lot about how Americans can declare bankruptcy and get out of their debts, but there's lots of people who are just have horrible credit ratings, therefore pay higher rates on all kinds of loans they take out. They're having their wages garnished, their checking accounts cleared out. It's quite a contrast to this utopian vision that originally founded the state of Georgia. And then the other part of your question, which is about going to court, and there was a fairly funny thing that happened to me, which was that I wanted to actually see what this process was like. So I followed the package of debt that I followed in the book, and I went to one of the courthouses where some of the debtors connected to this package had been through. And I just showed up just to kind of get a sense of it. So I'm waiting outside the courtroom, and I start talking with this couple who's being sued over a credit card debt, and they don't recognize the people that claim to own the debt, that the creditor's name doesn't ring a bell for them, and the amount doesn't make sense to them, and there's no documentation about the breakdown of that amount. We're trying to figure it out, and this guy calls out their name, a young lawyer. This is outside the courtroom, and he calls out their name, and they walk over there, and he says to them, I represent the people that own your debt, and let's just settle this basically. Let's just settle this right now, and we can work out an agreement, and you can pay me, and we don't need to go before the judge. And he then reaches into his briefcase and pulls out this document that looks almost like a credit card statement, but kind of like a mock-up of a credit card statement. All it has is the amount they owe, their name, their address, and then at the top, in bold print, it says, "This is not an actual credit card statement." Okay? So they're kind of looking at this to see what this is, and they start talking to this lawyer, and at some point along the way, I pipe up and I say, "Do you have any documentation to prove that you do in fact own this debt, or any further information that gives a breakdown of the debt?" And he says to me, "Are you a lawyer?" I said, "No, I'm just writing a book." And he said, "Well, you can't represent them." And in fact, as this escalates, he says, "I'm going to take you in front of the judge." So I return to the courtroom with this couple, and the woman who actually is on the hook for the debt, the judge calls her up, and then the judge calls me up as well. And we get sworn in together, kind of like we're co-defendants in this. And it was like a Kafka novel or something. So I'm sworn in, and the lawyer who's suing on this debt proceeds with his opening arguments and says, "Mr. Halpern here appears to be practicing law without a license, and Your Honor, can you please tell him that he could face criminal sanctions for doing this?" And I say, like, "Your Honor, I just asked a question. I'm trying to figure out the process with these folks that I met about 15 minutes ago." So this goes on for back and forth for a little bit, and finally the judge says to this lawyer, "What do you want to do about the matter of this debt that this woman owes?" And he says, "Let me consult with my client." He goes up, makes a phone call, comes back and says, "Your Honor, we're going to drop the case." So at this point, me and the debtor are looking at each other like, what just happened? And we're kind of scratching our heads. We walk out into the hallway, and there's a guy there who's for Georgia Legal Services, and he says basically to us, "I'll tell you what just happened. You said the magic words, and the magic words are, prove your case." In other words, this couple, simply by showing up in court and pressing back just a little bit, asking for the barest, thinnest amount of evidence of the legitimacy of this debt and the detailed information of this debt, was enough to make the person suing on it back off, and the whole thing kind of just crumbled. And it was this moment where it was so funny. The whole book, I've been chasing this package of debt, this Excel spreadsheet through the streets of Buffalo, then I'm down in the courts in Georgia, and the moment it comes under even the faintest bit of scrutiny, it's like it just vanishes into nothing.
That's amazing. Now, you mentioned earlier that the whole chasing of paper and the whole zealousness of the debt collection business got to a larger height during the Great Recession, after the financial crisis, because people just simply had less money to pay and they had more debts that had accumulated. And you talk about the term the shadow economy.
Right.
For those people, which I find very interesting, because when we use the term shadow banking, usually it's about hedge funds, it's about Cayman Island tax shelter type things. Yeah. And the shadow economy is something different, and it's something that you discuss with respect to the people on the bottom of this, and I want to know if you can just talk about where you think those people and how that's going to evolve going forward from where we are now.
Right. So this happened, the way that I kind of stumbled into this is when I was down in Georgia and I was looking at the lives of these debtors who had basically were being sued in court over this debt. I wanted to try to get a sense for what their lives were like. And one of them told me that she bought her car from a special car dealership that catered almost exclusively to people with bad credit. So I went out to this dealership, and what became clear is that they were paying an enormous premium for their bad credit. And in the words of this car dealer, their money was worth about 70 cents on the dollar. And a car that was should have cost $9,000 was going to cost $13,000. And in fact, another debtor who I followed, he actually had his bank account cleaned out. He was one of these guys that there was a judgment imposed against him. They found around him, and they cleaned out every cent that he had in his savings account, which was then going to cause him to default on his car payment, which then could compromise his ability to get to work. And his particular situation is he had a device, a GPS kind of device on the engine of his car. So the moment that he went into default on this car loan, which he was paying this premium on, boom, the engine would shut off and his car would be stuck at the side of the road. So this is the world that people inhabit who have really bad credit. And I went and stayed at I visited this housing complex where it was basically all people who had very bad credit. And yeah, they live in this world where they are paying the highest possible rates of interest. And there's basically no trust. Creditors don't trust that they're going to pay the bills, and so they get kind of stuck with this. And on the one hand, you can kind of understand it from the creditor's perspective. These are very risky investments, but it's also pretty hard to see people who are so poor having much of their income devoured by interest, and they're the ones that are getting kind of the most gouged by this.
And when you talk to the FTC or the Consumer Protection Board, have you gotten a sense that this is an issue whatsoever at all, that they're trying to do something about, helping the people on this side of the circuit, and also just generally, you know, the fact that there are such heinous interest rates and the payday loans way above usury levels on other loans, on credit cards that continue to get imposed on the people that have the least ability to pay. I think you mentioned one instance which is very logical, where one of the people in your book says, you know, if I hadn't been hit with the extra charge, the extra rate,
that's right,
I would have been able to pay this. We could have negotiated. Everybody, you know, this all could have not been this chain of shadowy underworld financial stuff. Do you sense any understanding of trying to get to the root of this matter at the Washington level?
I think, I think the creation of the Consumer Financial Protection Bureau, which was the kind of brainchild of now Senator Elizabeth Warren, was a good move, and they are starting to make a difference in this space. And they're going to have new rules coming out in about a year that will affect debt collections, and they've been aggressive. I mean, it isn't, if I were in charge, I mean, I would give them more funding. I mean, a lot of this is going to come down to how much resources do they have to kind of go after the bad actors. So the Consumer Financial Protection Bureau might have a budget of, I don't know, between $400 and $500 million. But just to put that in perspective, if you look at the amount of money that J.P. Morgan Chase set aside for litigation reserves in 2013, basically the amount of money that they put aside to kind of defend themselves, the Consumer Financial Protection Bureau's budget is 2% of that. Wow. So you get the sense that they're doing good work, but they're kind of outgunned here. And I think that, you know, hopefully, if anything comes from the book, I mean, I hope it's a call to arms to kind of give them a shot in the arm. Another thing I was on the phone the other day with someone from the Justice Department. They have this operation, this initiative called Operation Choke Point. And the idea behind this is it's hard to go after the payday lenders that do the worst stuff. So what the Justice Department has started to do is go after the payment processors. So if I'm a payday collection agency and I'm doing bad stuff, I still have to rely on a payment processor to take your credit card or your debit card information and take the money. And the Justice Department has started to say, hey, payment processors, if you are dealing with these unscrupulous payday lenders, we're going to go after you. And there's been pushback about that because there is a strong payday loan lobbying presence, and that is pushing back against this. But I think that you need initiatives like that, and on a larger scale, if you're going to see the kind of change that needs to happen to clean up the industry.
Yeah, and hopefully, yes, and in reading your book, that chain is illuminated so well, and hopefully that can be a catalyst to at least increasing the funding and to look at these sorts of things. In the end of your book, and I guess towards the end of how many years the research did this?
Well, in one fashion or another, I would say it's been about 4 years.
Okay, so at the end of that time, you go back to Buffalo, you kind of do an epilogue on the characters, the individuals that have been involved on the debt collection side, on Aaron and Brendan, on Jimmy, and kind of see where they are at the end of, or the most recent period of time. What was that like?
I think the most surprising thing that I encountered in writing this kind of wrap-up, this epilogue, was that what I found from Teresa, who was the debtor, the former Marine, if you remember, and she's the one that paid the wrong collector, the collector that had somehow gotten a hold of her debt by theft. So I was curious about kind of where she was and how she was doing, and just as the book was about ready to go into its final version, she called me up and said, "You're not going to believe this, but I just got a call from another collector on that same debt," which was puzzling because when Aaron Siegel, who was the rightful owner of it, had discovered that there had been fraud, he did the right thing, which was that he retired the debt. He didn't sell it. He put it in it's a hard drive, and there, rest in peace, in theory. And yet, someone was collecting on this debt still. So I called the agency. I wrote them a letter, actually, that had contacted Teresa, and I said, "I'm inquiring about these calls that you're sending to this woman because they're threatening to sue her. What is your claim to ownership of this debt?" And I thought I would get I didn't think I'd hear from anyone. And I thought if I did hear from someone, I'd hear from someone in like some, chop shop in, Buffalo or something. Turns out I talked to a guy, the owner lives in Beverly Hills and is doing very well for himself. And when I ask him about this, he kind of says, "Let me look into this. Oh yeah, this debt belongs to a portfolio of debt that I purchased from a debt broker in Florida that was double sold, and a lot of the numbers have been manipulated, all these problems with it." But his attitude was not shock, but kind of like, "This is par for the course in this business. Hey, you're just purchasing data and you never know what you're purchasing." And it was this kind of chilling end to the whole thing, because of course you're not just purchasing data. You're purchasing the right to collect on people's debts and profoundly affect their lives. And somehow or another, whoever stole it from Aaron must have sold it to someone else as well. And to this day, Teresa's debt is just floating around there in cyberspace, and someone else will buy it and then try to collect on it. And somehow that more than anything else just kind of seemed to speak to the chaos and the dysfunctionality of this industry.
Yeah. So if you had to give one message to consumers and to regulators to fix this, what is the takeaway?
I think that the consumers is that you have to be skeptical of who's calling you on the phone, and you can't assume blindly that they have a legitimate claim to this debt, or that the amount that they're asking for is in fact accurate. And you have to do your homework and make sure that that there's still a legal obligation to pay this debt, and you have to kind of the equivalent of driving defensively with your financial reaction to these calls. On the larger level, there's a few things that need to happen. One is that there needs to be better enforcement, more resources for places like the Consumer Financial Protection Bureau. Two is the banks have to be more careful about what they pass along and make sure that information is correct and there's all the documentation there's supposed to be. And three, I think that there needs to be a change in the way that this court system works, because the 90% no-show rate and all these default judgments is creating these garnishments and all kinds of problems. So there's a fair amount that needs to be done.
Well, I want to thank you for coming here today, for writing this book, and for bringing this information, these stories of these individuals, and what happens to the people on all sides of this debt collection chain, and what they can do and what should be done at the higher levels of the country on a regulatory basis. I congratulate you for writing it. I loved reading it. I read this in a very quick setting, I couldn't really stop reading it. And so thank you for being on here. Thank you for writing the book, and the best of luck with it.
Thanks so much.